Welcome to Trade Pro. In this video, I'm covering Elliott wave theory. Someone commented asking about it, so here is the video. So I want to talk about an old strategy I used to use that utilized Elliott wave theory as part of it. And I also wanted to say why I don't think you should put any time into Elliott wave theory and a better way to look at the markets than using Elliott wave theory. All right. So let's just kind of go over the basic poster child chart of Elliott wave theory. Here it is, the classic 5-wave impulse followed by a 3-wave ABC correction. This chart is what draws people in. They're like, oh my gosh, wow, it really makes sense. The market really moves like this and repeats like this. The problem is this example is the best example that you're pretty much the best you're going to see. Almost never does it look so clean and look this good. Not to mention, look how many types of corrections there can be. And let's not also mention that within each one of the waves, there are impulses and corrections within the waves. So there's waves within waves within waves, corrections within corrections, within impulses. It gets to be way too much. And here's the main issue with Elliott wave theory. It's that it's extremely subjective. So if you have 10 Elliott wave experts all looking at the same chart, they're all going to give you a different Elliott wave count, or at least some difference on the Elliott wave count. So for those of you who may be a little bit emotional, having a subjective trading strategy is just not a good idea. It just leaves you with room for disaster. You need a system that tells you what to do, and Elliott wave is too subjective, in my opinion. And I'm not saying that you can't be profitable using Elliott wave theory. I'm just saying that you shouldn't waste your time on it because there's better ways to trade. But I will still go over how I used to trade with it, the strategy I used to use, which was profitable. So, I mean, I'm not hating on Elliott wave theory completely, although I don't believe it's the best way of looking at things. So how I suggest that you look at the markets instead of counting out all these different waves and also, you know, these different sort of crazy corrections where it just becomes too much and it's just too hard to identify. I think you should simplify it and think of the market like this: impulsive moves, corrective moves, impulsive moves, corrective moves, impulsive moves, corrective moves. All right? Does that make sense to you? There's no reason you need to be doing all of this. You can look at it in a much simpler way and just think about corrective and impulsive movements in the market. You don't need to label them and count all these crazy corrections and waves. It just doesn't benefit you when you're trading with indicators. All right, so it's too subjective. Everyone's going to get a different count. Leaves too much room for your emotions to get involved, and there are better ways out there. So that's how I suggest you look at it instead of counting Elliott waves. But let me go over the strategy that I used to trade with that used Elliott wave. So I found an example over here on Bitcoin, and it was a counter trend strategy using divergences on the MACD and the RSI. So what I would do is I would wait, be very disciplined, and I would wait for a really nice or quite clear impulse 5 waves. All right, so I would wait until a 5-wave move develops, and then once I see a 5-wave move on my chart, I pop up my MACD and my RSI, and I grab my trend line and I draw in all the divergences. So I say, all right, yes, we have higher high. Oh, do we have a lower high here? Yeah, that's definitely a divergence. And oh, yep, histogram, definitely a divergence. RSI, oh yeah, surely divergence. This thing's got to come down now. And I would also make sure that there was a gap here in the histogram. So there needed to be this push, big push up, and then a gap on the MACD, then the small push up over here for that fifth wave. And how I would short it is I'd be waiting for a cross down on the MACD. So for this example, I would have shorted right here on this candle, on that cross down. And what I would target is the bottom of the fourth wave. So typically, when you get this type of action, it corrects to at least the bottom of that fourth wave. And as much as I hate to say it, this strategy was extremely high win rate. It worked almost all the time when you were very disciplined and waited for the proper setups. So, I mean, it works and it's profitable, but it's not ideal. All right. So I don't recommend trading like this, but I did trade like this and it worked. So I can't hate on it too much, but I can recommend better ways. All right. So let's say for fun if this one actually worked as well for that strategy. This is on a much higher time frame. Let's see, I haven't actually checked this one. So it does meet the criterias yeah. So this one you would buy right here. Right here. So, and it did make it to that fourth. So, you can see why I use this strategy, and it does work as far as a strategy goes. This strategy is profitable, but it leaves a lot of room for emotional decision making, more so than most of the indicator strategies that I have shown, and it's not trend following. So, you miss out on the big moves. You get these small retracement moves, but you're not going with the main trend. So it's kind of dangerous for someone who's not really experienced and doesn't know how to spot the 5-wave moves. They sort of have a way that they move when it's going to work. And this is where it gets subjective, all right? So the ones that work, they look a certain way. They kind of have like, it's the fifth wave, the fourth going into the fifth that has a certain way that it looks. So it kind of has this like almost arc to it. And this fifth wave, I don't know how to describe it, but I just kind of developed a way of looking at it where it just looked a certain way where I would be so confident in that it's going to work out. But it's so hard to describe, which is why it's such a bad strategy. You should be able to say definite rules, but I don't know. It's a lot of the time that you get this more choppy price action as well. Yeah, well, you can probably see why I'm saying it's not ideal, but it worked for me at that time, so I'm having kind of mixed feelings about talking about it. But anyway, I hope you kind of enjoyed this little insight into my Elliott wave history, and I still just recommend you stick to the simple way of thinking about the market's movements as just simple impulses and corrective movements. Impulses and corrective movements. All right? You don't need to go in and count the ABCD XYZs and all these waves, because it's when you zoom out, how many of these movements actually look like nice 5s and 3s and triangles and oops. Most of the movements aren't going to look nice. All right? I mean, tell me what this is. What is that? But anyway, I guess, it does work for people who are really willing to wait for the nice setups. And that's the reason why it worked for me. It was because I was really willing to wait until there was a really nice looking setup. It has to look right. And the problem with just saying it has to look right is it's just so subjective, and you need a lot of experience with identifying these things. So it's up to you if you want to put any time into it, but I don't recommend you learn Elliot wave at all. All right, I think that's pretty much what I have to say about Elliot wave. So thanks for watching and have a nice day.